Throughout history, various fiat currencies have risen and fallen due to a range of factors that have contributed to their eventual collapse. Fiat currencies are government-issued currencies that are not backed by a physical commodity like gold or silver, but instead derive their value from the trust and confidence of the public. When this trust is eroded, fiat currencies can experience hyperinflation, economic instability, government intervention, and loss of public trust, leading to their demise. One notable example of a failed fiat currency is the Zimbabwean dollar. In the early 2000s, Zimbabwe experienced hyperinflation due to a combination of factors including government corruption, mismanagement of the economy, and excessive money printing. The hyperinflation reached such extreme levels that citizens were forced to carry bags of cash just to buy basic necessities. In 2009, the Zimbabwean dollar was ultimately abandoned in favor of using foreign currencies like the US dollar and South African rand. Another example is the Venezuelan bolivar, which has also experienced hyperinflation and economic instability in recent years. The Venezuelan government's intervention in the economy, including price controls and nationalization of industries, has exacerbated the economic crisis and eroded public trust in the currency. As a result, the bolivar has lost much of its value, leading to widespread poverty and social unrest in the country.
The United States dollar has been a fiat currency since 1971 when President Richard Nixon officially ended the convertibility of the US dollar into gold. This decision marked a significant shift in the global financial system and had far-reaching effects on the global economy. One effect of making the US dollar a fiat currency is increased inflation. Without the constraint of a fixed gold standard, central banks have more freedom to print money and expand the money supply. While this can help stimulate economic growth in the short term, it can also lead to inflation as the value of the currency decreases relative to goods and services. There are also potential downsides to having a fiat currency. One concern is the risk of hyperinflation if central banks print too much money and devalue the currency. Additionally, the lack of a fixed standard can lead to currency manipulation and instability in exchange rates, making it difficult for businesses to plan and invest for the long term.
The buying power of the US dollar since 1971 has been significantly impacted by various economic and geopolitical events. From its early years as a fiat currency to its current status as a global reserve currency, the dollar's value has fluctuated against other currencies. Understanding these trends is essential for investors, policymakers, and anyone interested in the global economy. When the money supply grows faster than the population, it can lead to inflation. As more money chases a constant quantity of goods and services, the prices tend to rise. This is because the increased money supply reduces the purchasing power of each unit of currency, causing individuals to demand higher prices for their goods and services. The U.S. population grew by 3.3% from 1971 to 2025. Yet the money supply increased by 1,000% over the same period. This excessive printing of money was required by the excessive spending of the federal government. Is it possible for the government to rein in its spending to prevent further loss in purchasing power of the dollar?
President Trump's administration has taken several steps to rein in government spending, including passing a sweeping package of tax proposals, spending cuts, and reforms for key federal programs. The Department of Government Efficiency, DOGE, has saved the government $55 billion so far, with an estimated additional $160 billion in savings as of April 2025. This includes cuts to contracts, leases, and grants across over 176 departments and agencies. However, even the reductions in spending resulting from the efforts of DOGE does not significantly impact the interest on the national debt, which exceeded $1.2 trillion in 2024, surpassing military spending. The interest on the national debt now costs more than national defense and Medicare. The Gold Card is a new residency permit introduced by President Trump as an alternative to the existing Green Card system. It is priced at $5 million and offers a direct route to U.S. citizenship without the usual residency requirements. This initiative is expected to replace the Green Card system and reduce the national debt by $1 trillion. But the national debt is now over $36 trillion. Can any changes to the federal government be made that will get our nation's financial house in order? Only the future will tell. You probably know that your personal credit rating determines how easily you can borrow money and the interest rate you will receive. In the same way, governments have credit ratings. And, recently, Moody's lowered the credit rating of the United States from AAA to AA1. They indicated that successive U.S. administrations and Congress have failed to agree on measures to reverse the trend of large annual fiscal deficits and growing interest costs. They had previously released a pessimistic report that said, the U.S.'s fiscal strength is on course for a continued multi-year decline, driven by widening federal budget deficits, a rising debt burden and falling debt affordability. Standard & Poor's, another credit rating agency, had already lowered the U.S. credit rating in 2011. Can any administration rein in federal spending? Federal spending through April this year is up 8.9% over 2024's spending. Do the President and Congress have the political will to control spending? Time will tell.
The rise and fall of past fiat currencies serves as a reminder of the importance of careful monetary policy management, economic stability, and government intervention. Yet, one has to wonder if the US dollar can be saved. While this news about the dollar is discouraging, there are steps you can take to reinforce and strengthen your own financial position. And that is to diversify your wealth so it is not all in US dollars in order to minimize your risk and maximize your returns. This basically means to acquire physical assets like precious metals and real estate. One of the main reasons to diversify into precious metals like gold, silver, and platinum is their ability to retain value over time. Precious metals have been used as a store of value for centuries and are considered a safe haven during times of economic uncertainty. They can provide a hedge against inflation, as their value tends to increase when the purchasing power of fiat currencies decreases. Real estate is another hard asset that can offer significant advantages for investors. Unlike stocks and bonds, real estate provides tangible benefits such as rental income and property appreciation. Overall, diversifying into hard assets like precious metals and real estate can provide a number of benefits for investors. These assets can help protect against market volatility, provide a hedge against inflation, and offer unique tax advantages. By adding these tangible assets to your investment portfolio, you can build a more robust and resilient investment strategy that can help you achieve your financial goals.
Thank you for taking the time to watch our video. We truly appreciate your support and interest in our content. We hope you learned something valuable from this video. If so, please click the thumbs up, like button to let us know. Now, we recommend you watch this video next. It will further boost your knowledge and skills in this important area.